Hello, everybody. This is Keith Collins with the Keith Collins team. We are certified mortgage planners at a local direct mortgage lender called Alpine Mortgage Planning. Basically, we help homeowners with all their mortgage needs, from seasoned real estate investors to first-time home buyers. So I've been working, but I haven't done an update for about 3 weeks. Just kind of took a little bit of a break. Going to be back with it, sending out a weekly update every Monday morning. So this is it. 3 updates today. Got a little bit about an interest rate adjustment. We're going to talk about FHA updated loan limits, and then I'm also going to talk about Cal HFA, the CHIDAP down payment assistance program, which we are funding. So first, bad news. This is an update. Interest rates are being increased across the board, not just with our company, but it's an industry change with Fannie Mae, Freddie Mac, and FHA. So the Temporary Payroll Tax Cut Continuation Act of 2011 was signed into law on December 23, 2011. Among its provisions, the new law directs that the Federal Housing Finance Agency increases guarantee fees charged by Fannie Mae and Freddie Mac. This new requirement is effective immediately and will be implemented the following changes for all conforming loans, including high balance. So what's happening is interest rates are being adjusted up 40 basis points across the board for any Fannie Mae or Freddie Mac loan. That's not just our company. This is industry-wide, nationwide. For example, let's say today or prior to this change, interest rates were 4% with no points. All right, so just essentially a no-cost loan in terms of points or discount points. Today, with this change, that loan, that 4% rate, has now a 0.4% cost. So for example, if it's a $200,000 loan, 4% par, no cost, now today, because of this change, it's an $800 additional fee to the borrower. So just FYI, loans are getting just a little bit more expensive, not because interest rates have increased because of the market, but because the government has created this fee for Fannie Mae and Freddie Mac. So moving on, a little bit about interest rates, other information. FHA high balance loan limits. So our Tri-County area, El Dorado Hills, El Dorado County, Placer County, Sacramento County, the loan limits were increased a couple months ago, maybe about a month ago, to $580,000. So they've moved up from the $474,950 back to $580. Now, that's only for FHA. That's not for conventional loans, Fannie Mae, Freddie Mac, okay? Excuse me, I'm getting over a cold. So FHA loan limits have been increased to $580,000. And then finally, my big update. We are funding the CHIDAP Down Payment Assistance Home Loan Program. So I'm just going to read a little bit of information. The California Home Buyers Down Payment Assistance Program is a deferred payment, simple interest, junior loan. The CHIDAP loans are available up to, but cannot exceed, 3% of the sales price or appraised value, whichever is less. The CHIDAP can be used for down payment and or closing costs. All right, so essentially, someone can do an FHA loan and put a 0.5% down and get this loan for 3% of the rest that's due. Because on an FHA loan, 3.5% is the down payment. So they get a loan for 3% of the 3.5. They have to come in with a 0.5% down. Pretty cool loan program. There are no payments due. They are deferred for the life of the loan. I can explain that more in detail later. It's for first-time home buyers only. They do have to take a home buyer education course, which is pretty simple. We hook them up with that. It is only for owner-occupied properties, and there can be no non-occupant co-signers. So the occupying borrowers have to qualify on their own. A couple things. Can only be for a single-family unit residence. So that includes a PUD or a condominium, but it can only be for a single family. No duplexes, triplexes, or fourplexes, okay? Probably not really running into this too much, but there's a 5-acre maximum acreage allowed. The loan amount, the max loan amount is $417,000, and you can't do this on any flipped properties. So a flipped property is a property that's been resold within 90 days of the acquisition date from the investor. So an investor, let's say, buys a property, county courthouse steps, and then is reselling it within 91 days of their acquisition date. That's considered a flip. Can't do this on that loan program. There are income limits and sales price limits. You're not going to really have to worry about the sales price limits because they're quite high. The sales price limits for the Tri-County area, El Dorado County, Placer County, Sacramento County, $528,000. If we got a first-time home buyer buying at $528,000, awesome, but that's generally not the case. There are income limits that are based on the household size. So how many people in the household? Going to go off the tax returns, and we're going to look for dependents. So how many they're claiming on the household. One-person family, Tri-County area is the same. El Dorado, Placer, Sacramento, it's all the same. $60,450 for a one-person family, $69,100 for two, $77,750 for three, $86,350 for four, and it just goes up from there. So there are income limits that we just have to be careful of. So down payment assistance is back. The grant, we're hearing rumblings that the grant program, the National Housing Fund Platinum grant that we had last year is coming back, but it's not back yet. So in the meantime, this is a great loan program to get some down payment assistance for our first-time home buyers. Keith Collins, Alpine Mortgage Planning. I hope everybody enjoyed the update and is just having a very successful 2012. My phone number, 916-253-7820, 916-253-7820. You take care. Bye.